The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on the second day of December, Tuesday. We're looking at this, the 8 a.m., 8:06, in fact, a.m. I'm doing the show early. It'll be repeated at 10, and I will, of course, be interviewed by Tommy this afternoon about 3:15. So here we go. The Dow futures are up 42. I'm just going to run the futures, and I want to go to the actual charts themselves, the cash charts. So the S&P, so that's the E-mini. That's the E-mini is up 16.50. Look at this nice candle right here. Very strong move from the low that was made. And this is going to be very important because the four, 1, 2, 3, 4, the four, actually even five sessions yesterday made a new high, a new recovery high, that is. That is a powerful move, a takeoff move. I monitor this kind of thing for years, and the stronger the takeoff move, the greater the chances are that you aren't going to go back to the low, but you could have a bit of a pullback and then head higher. So you need to see the stochastic, which is at 82%. That's good in the E-mini. What was the futures for the Dow? Stochastic's not so good. It's at 63.7, but in fact, the price for the Dow, look at this, the cash, INDU, of course, you'll be looking at this when the market's open. I would love to see an inside bar. That means a higher low and maybe a lower high, but it's somewhere around there, closing up maybe 80 or 90 points without making a new low today. We'll see if that's possible. But most importantly, look at this powerful move. And here again, the stochastic's only at 58% in the cash. Look at the NQ, which is the futures for the NASDAQ, for the E-mini NASDAQ 100 continuous contract. This is already in leg B. A very nice move, very good action right now. Look, it's up 98 at 25,489. So that means that the stochastic's at 76, 78. Oh, if today can get to 80, I can get a buy signal upgraded almost immediately. In fact, it is a buy signal. I'm going to put this as an up arrow right now because the 9-period moving average has been positive for 2 sessions. There we go. Buy signal says that it should go to a buy mode. If it goes to a buy mode, it means it should go to a leg D. There's all the big shoulds. IWM, this is the Russell 2000, here's the cash. Nice action yesterday, intraday, and then it kind of pulled back. We went right to the inside track repellent zone. Look at the RTY, that's the futures. The futures, a slightly different pattern. But look how long the 9-period moving average has been positive since last Wednesday, I think it is. And the stochastic's already at 92%. That's fabulous. So one of the reasons why we are long the IWM, and we added to the long on the Dow. So we got a lot of long positions. We were putting that cash to work. I do want to look at the so just as SMHs. So the SMHs, the semiconductors are up pre-market, up 2.79 at 355.75. They broke the inside track repellent zone. That's the falling axe pattern that we're looking at right there. This is a good sign, and the action yesterday went to a new recovery high, leg A. Stochastics at 70. I want to see it at 80%, but this is good action. Look, those weekly charts are also very positive, even after that sudden slide. Now, I do want to go to gold because gold had a big pullback last night. I say a big pullback because it hasn't had one like this for quite some time. It actually, it's trading down 37 right now at 42.37. Well, it did on overnight. It went all the way down to 42.10. So this is peak D. You expect a peak D. You expect a little bit of a hiatus in the rally sometimes. SI, which is a silver contract, very good. It's down 99 cents today, 58.14. Had a huge, let me just check. A, B, G/B pulls back. That's an A. And that's, okay. So this is a leg C, maybe a peak C today, all-time high. Leg F, this is in the weekly chart. And leg E in that left side, right side price time symmetry, and it was quite a few bars earlier, but I'm going all the way back to where, wow, I'm going back to the match from the highs that were made back in October of 2012, when the silver was up, the continuous contract was up at 44 in the 44s. Of course, it gets smoothed out, so that price is not everything else, but the price is the same. Okay, let me just close this a little bit. Am I going to make a mistake? No, I'm not. Okay, very good. Let's see what high-grade copper is doing. High-grade copper. So we still have our silver share. We have our gold position. We don't have anything in the copper. Copper's pulled back just 3 cents at $5.26 at a peak D. So maybe it takes a little bit of a hiatus here. We'll see if that's going to be the case. Weekly chart's been improving. It's not great, but some of the stocks have done, some of this copper stocks have done very nicely. All right, I do want to go to a question yesterday, and I forgot to answer. Well, it was after the show. Let me just check. Yeah, we'll go. You had mentioned years ago, a long time ago, that Goldman Sachs should be the leader in the major move to the upside. Where did I just? Oh, I just typed it into the wrong place. I typed it into the den. My mistake. Let's go here. Goldman Sachs. Yeah, I don't see any reason why it shouldn't. Goldman Sachs, it always goes to the top, to major tops and major moves to the upside. It's under the 841.28 high that was made back in November. It slumped down to 754, round number low on the 20th of November. Had a big move up. This is gray leg A. I haven't yet got it into a buy signal, but that weekly chart is still very positive. Yeah, Goldman Sachs, the 798 area should be very good support if it gets there. My thinking is it'll try for the 820 level before it goes there. Okay, what was the next question? I had wrote it down here. Yeah, Palantir, let me just do that. At this particular point, I haven't got to the bonds or anything. Yeah, Palantir is starting to work its way higher. I think some of these major stocks that have been favorites have been struggling lately, and we're going to watch very closely to see if they come back. If they come back, that's going to be very important, because that'll be kind of a fulfilling a previous rally, coming back again, and then starting to make sure that they are leaders. Right now, it's in just a hiatus. It's in a trading position. It's at 169.09, up $1.60 pre-market, pre-open. I do want to go to bonds because, wow, what a hit yesterday, huh? Yes, a gain today, down 430 seconds at 116.330 seconds. That means the TBT is in a very strong move that hasn't yet to 34.20. 34.20 is over 34.09. It's over the 18th of November high. Oh, boy. And now that's improving the weekly chart. That means it's in the leg B in the weekly chart. Well, I don't know. I think the fear is about higher rates, but we'll see. All right, not saying anything. Let's see what Toll Brothers is doing. That'll give us a good clue. Toll Brothers, yeah, didn't ignore the big move yesterday. High yield. A, B, it's in leg B. It's in leg C, actually. It's now right at 139.62, down 26 cents. Basil Chapman, early edition of the opening call. Early edition of the Tiger. This is my newsletter is the opening call. Check it out. We've got some nice entries, and we're trying to add all the time. I'll be back in a moment.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
Hi folks, so we're looking at this early edition. This is 8:18 a.m. in the morning. It'll be replayed, and this will be 10:18. By then the market will be open. But right now we still have the Dow up, futures up 51. The the S&P futures up 17, and the Nasdaq is up 104. Very nice action. So we're looking at Toll Brothers. So that's a good sign. So see this chart in the middle. This chart here shows you that there's a chance that it's going to do this pattern right now. That's the cup formation. And to confirm it, we've broken the Chapman wave inside. This is the, called the falling axe pattern right there. It just looks like an axe. It goes up to a peak F, pulls back, and now it's broken out of the resistance level. 9-period moving average never went pink on that pullback. This is usually very good strength. If you do the futures or anything like that, use that as a good tip-off to say the price should spring back until it goes pink. And that says that Toll Brothers right now, right there, Toll Brothers, is monthly chart is improving. The weekly chart has this pattern. If it breaks under 130, that's a problem. But right now it's at 139. And the daily chart, I'm going to put this in because the stochastic's at 90%. The 9-period moving average is positive. So this is a buy mode saying that Toll Brothers, symbol A, B, C, symbol TOL, trading at pre-market 139.62, down 29 cents. 26 cents, is doing very nicely. What did it do yesterday as a high? Was that a round number high? 141.33 now. All right, so that's doing well. Now, let's do a couple of things. I did that. Oil I didn't do. Oil is trading down 15 cents, not going anywhere. And now I can go through all the different things. Look, Apple. I love this Apple chart. I was looking at it, and I think Apple making all-time high at this particular point. Leg C in the daily chart says it should still go to a D. Leg D in the weekly chart still very strong. Flat stochastic in the weekly chart at 92%. Man, that is leadership, and that is a good sign because Apple in the Dow is helping the Dow. And let's go to Amazon. Amazon, let's see, this is holiday time, and Amazon is not doing all that great. It hit a 258. Now, this is I mentioned this when it happened, and then I said it's very unusual that this should go to an all-time high at a peak C, because it took out this left side low of the 4th of August at 211.42. We went to a peak C minus because that made the arch formation, and went to a lower low. It went to 211.03. So you got 0.03, but 0.42 was the previous one. So this means this move up, instead of getting us to the D, has to be a brand new move off the 200-period moving average. So it went to an all-time high at peak C 258.60. That is so unusual, and I don't have any C1, C2. In other words, if there was another peak just under it, I could call a C2, and then we get equivalent of a D, and you can expect a pullback. This is very unusual just for the notation in the chart wave, not the chart pattern itself. But Amazon, with everything that's going on with one of the highest numbers of buyers of goods and articles and things over the last week or so. This is just very interesting. Let's go to, I want to go to Google. I'm going to go to Google, not the trading one. Oh, I may as well have gone to the trading one. How on earth could I have lost all my information on Google? Well, what did I do? I didn't get shut down by... Oh, I've got it. It's Goog. Oh, that's right. Google, with the L is the trading one. I've got the alphabet search engine. This is the C shares. Leg G/C in the monthly chart. G/C after the instant restart. I think it's going to go to a higher high. It's going to go to a leg D, the previous high of 328.67. That's intact. I think we're going to go higher than that. So this is still very good. That's Google. I had a question about, Oh, yes, of course, Microsoft. So I haven't added to our Microsoft yet. I'm looking to add. I think that it's going to get going very soon. But wow, it's been a struggle. It goes from 553.72, 28th of October, all the way down to 464. I mean, 100 points, what is that, almost 20%. Hey, that was a big move. Peak A, and now we're waiting to see how it goes into the 498.503 area. When can it do it? How can it do it? That weekly chart is kind of pointing down. So not all of these, the biggies, are confirming anything right now. They're kind of struggling. All right. Now, General Motors question came up yesterday. Trading right now up 6 cents to 73.01. I like it. We are long. But I'm long saying that this is, at this particular point, I'm just calling it a trade because nothing makes sense. Why would General Motors at this particular time, when there's talk of jobs, just tough, it's tough out there, why would it be at all-time high? So we are long. We'll be pleasantly surprised if it gets into the 75.80, 76.30 area, kind of a nice breakaway from the 71 to 72 area it's been trading in for a little while. But we'll watch this closely. And then there was another one that I was looking at that was in the same category. Yeah, look at this. General Electric had a horrible session. I mean, look at that. That doesn't look too good. So it was a GE Aerospace, aircraft engines. It was a real winner. GE, let me put this together with Boeing. A different kind of a chart at some point earlier in the year, but now they both seem to be going together. Look, Boeing up $6.44 pre-market at 192.90. So that continues this leg A. That's a big improvement. But for General Electric, aircraft engines, I don't know what's going on. It's not a big deal. 316 double top, and now it's at 284, 10% correction. I mean, many of the others have had a much bigger one, but it's a little surprising, right? So we do own GE way from down there, 198.90, just a little bit left in that position. I'd like to add to it, but not yet. We are doing adding, and we're starting new positions in different sectors. But at this particular point, I need to see proof of the pudding that we're going to get a buy mode. We haven't got a buy. We've got a buy signal, very close to a buy mode. Haven't got it yet in the Dow and some of the other key indices. Now, there's another thing that I need to talk about was the VIX index. Yeah, I got a kudos the other day from someone, but actually the kudos was for the interpretation, I think, because in terms of the Chapman wave notation, I think it's kind of accidental that you had your peak F at 28.99 on the 17th of October, and this was a peak E just a couple of pennies below it, but it was an E, and that says if it's a D or an E underneath the previous high, be careful, because that's when you can have the sharpest pullback, and lo and behold, the VIX index has gone from the 28s to the 16s. I would say that that's quite a pullback. So with that said, we're about to come up to the 8:30 time frame. Usually there's some economic news at 8:30. We'll see if that happens. We'll see if the E-mini is shaken up a little bit. E-mini right now has gone sideways after having a very nice bounce. It's up 18. You're going to be watching this closely. Peak D in the 10-minute chart, peak D in the 5. I'll be right back. Basil Chapman, early edition, 8:26 a.m. I'll be back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day, Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
I just wanted to mention that there's a technique that I discovered a long time ago. That's called the narrow rectangle. And look at this. The 1 minute E-mini has been in this trading range between 68.46 and 68.42. It's a 4-point range for 30-something minutes. And here we are coming up to 30 minutes of the hour, and we haven't got anything yet to see if there's a sharp move up or down. But isn't that interesting? So that's something like 32 bars. All right, so let's get back to our story here. And the story is that the VIX index is down in the lows, and that's just suggesting that especially since last week was a big move to the downside, that the fund managers were maybe surprised a little bit. They were maybe they took the week off or whatever it is, and now they're trying to get back. And that's the reason why I thought yesterday could be a down day, because it's important to force the market down because they missed the move. Now they'll start doing the buying, but the buying might only come in maybe today, but I think by tomorrow there should be some buying. All right, let's get back to our story. And the story is within the context of so CVX was a question I had. That is Chevron. Look, Chevron's just been in the sideways move, holding the 200-period exponential moving average, showing right now at 152.58. It's just kind of stuck. But ExxonMobil has had rising higher highs and higher lows. It's a slightly better, not great, but it's a slightly better chart formation. And it's just interesting in this whole field of the oil, I just want to do this. Let me get a refresh here. Okay. Why is, what's going on? Is it my charts? Okay, gonna go thing and R. There you are, okay. All right. So within the context of the multinationals trading closer to their highs, I had a question about RIG. This is Transocean Limited. Done very nicely. Look, good rally in the daily chart, gone to a leg E right here. This is a G/C after an instant restart. Invariably goes to a D right on the 200-period moving average. There's your D. Interesting how that technique has worked so nicely so many times. Leg B in the monthly chart. So something's happening here that I haven't been able to pinpoint it, but the oil service, just not all of them, but some of the area, even the fact that with oil so low that the multinational oil companies are holding well. I'm just watching this. I'm on FSLR. I've got it all notated. Remember, I lost everything. How many thousand times have I had First Solar all notated? What is going on? I wonder what happened there. All right. So meantime, back at the ranch, what we've got is First Solar is at 263.54, kind of double topping here, but holding well up in the higher range. So my thinking has been for quite some time here that the multinational oils are just waiting for maturity in some of the solar companies. And then instead of them doing all the work, they will just buy a couple of these and they'll have it on their roster. So they can do a multiplicity of energy-related to have contingencies, etc. I think that's just the way to look at it. In the den, there's a question about ARWR. ARWR, Scientific Progress, keeps rolling. Yeah, that's very nice. This is Arrowhead Pharmaceuticals. This has been on Tiger's agenda for quite some time. I'd even go back to putting it right there when we were down in the 18s, I think you were talking about this, and here it is at 57. Very good. Peak D, brand new move to the upside, but then that's a lower low. I'm just for now going to call this an E. It can still go E, F, and G, but I'm calling it an E in the daily, and a G/C alternate count just for the moment in the weekly, because that wasn't an instant restart, but definitely was the start of a new move to the upside. This is doing so well in pre-market. It's up 99 cents at 59 up 99 cents at 57.24. And within the context of all of this, nines over the weekly chart looks good. Monthly chart is still, I can't believe it. It's in a leg A. It's gone from $10, actually, I think under. It went from $9.57 in, was it April of this year? April of this year, it's at 9, and Arrowhead Pharma is right now trading in leg A, having hit 50, what did I say it was? 58 point something, right? 59.15. Outstanding action. Good eye, good eye. December 2016, Basil at $1.28. Whoo-hoo. This is 2016. 2016. Oh, December. That's what you've got. December, the low was $1. Excuse me. Oh, you got in at $1.28? Because this low was 120. Oh, you missed the low by 8 cents. Wow, it's already gone to this high right here of 93.66 in June. ARWR is I'm sure someone's saying, what is this? What is? That's a symbol, Arrowhead Pharma, 93.66 in June of 2021, and then it comes back and it does this test in the nines. All right, so question came in here. Oops, I just heard a little ping. That must be me. I'm going to go and see what my engineer chart is gone, but I can see the chart. Maybe it's you because I can see the chart in a little window. Let me just ask. Chart is back. All right. Whoa, I don't know what that's all about. All right, charts in, charts out. Question came in here. Beth, can you look at TEM? Yeah, I looked at TEM the other day. I don't know if I've got it all notated. TEM is T-E-M. That is Tempus AI Inc., Precision Medicine Diagnostics for Oncology, Cardiology et al. Yeah, I looked at this and I thought, let's see how it handles the 200-period moving average in the daily chart, because it's been there out of the last, put it at the last, from the 9th was over the 10th, the 7th of November, it hit the 200-period moving average. It went to 67.19. Then it didn't touch it again until the 13th. But from the 13th through the 21st, it hit it every single day. And then it popped to the upside. So now it's pushed away. It's trading at 75.19 pre-market, up $1.12. This 9-period moving average, if today's action continues from pre-market to post-market, and it's up in the 75, I believe that the 9-period moving average will turn positive. The MACD has already turned positive. The stochastics at 77, it will go to 78, maybe 82, and that would mean that it's got a buy signal. So this is peak B, and if it goes above, this is Tempus AI, TEM's the symbol. If it goes above 79.96, it goes to leg C. I'll be back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Open Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Folks, early edition of the Tiger Nations Hour. This is at 8:42 a.m. So we're looking at TEM, which is Tempus AI Inc., Precision Medicine, etc. So I want you to do this. In the Chapman methodology, it's imperative that you have a look back and you see where the notation has changed, and you should change it. It's not cheating if you go back. For instance, I had this as a peak C right here in October for TEM. I had a peak D, down arrow, and then an up arrow right here on the 25th of September. And the reason was that there was a nice turnaround in the technicals, and then the 9 period went back to green. And I was anticipating a D. It did not come. So in the look-back period, I have to take away this up arrow. It was wrong. It was inappropriate because it had a top and then it came down and made a lower low. So I have to go back and say, well, this is where I put in that inversion of the V. I put a little cap, a little hat. And that little inverted V or pyramid says that you did make a peak. You did absolutely legitimately in the Chapman methodology have a down arrow, but this particular rally failed. It's not your fault. It's not like you're responsible. Oh, see, is there a problem with the chart? I'm seeing the chart in the Tiger YouTube. Oh, it just went out. Oh, my, now it's me. So what do? There's something wrong. I don't know how to fix this. Let me just do this one more time. I'll go stop streaming, then stream. Oh, it just comes up in a different way altogether. Applications, share screen, and there it is. All right, it's back. It should be back. This is something, I'll have to figure this one out. It's in Teams. I don't know what's going on. Anyway, so this becomes the new top right there, the high that was made on the high that was made on the 9th of October at 104.32. And then look what happens. It makes lower lows, lower highs, low lows. And then it takes out that base. That means that fails. So that means it's the backup top that I put in. That's that inverted V. And that becomes a C minus, an E, and a C minus. And now I'm ready. Now I can start fresh. This is not yet a buy mode, but it's a trough A, B, C, D, E, F. F and G is where you sometimes get nice turnarounds. And we'll be watching this. So the question is, I'm not in yet. Where should I get in? And I'm going to say to you, I think I would wait for the 9 period moving average to cross positive But intraday towards 3 o'clock, if it's positive, I would then enter the position. I don't think there's a rush in this particular chart from the weekly. The weekly 9-period moving average has just flipped negative. I do see the potential that if it gets into the 82s in the next 3 to 5 sessions, that is a big deal. That means it should go to the 85s next. So if you want to sacrifice maybe 2 or 3 points. What was the high yesterday? High yesterday was 77.05, and then get in. There's a little safety factor there. Or you can get in now and say, look, at 75.14, I'm in. I'm going to make it a very tight stop, maybe a 2-point stop, 73.14, and just have a trading stop all day. But that's not the issue. The issue is if you want to get in, you're getting in because look at the monthly chart going peak A, B, C, D, with higher highs and essentially higher lows. This is on its way up, except that this candle, the Chapman Wave Roman candle right there from last month, November, says that if it trades and closes on a weekly basis, usually I'd say on a daily basis, I'm going to make it a weekly basis. Underneath 72, that's the halfway marker of the wick, is a good chance it's going to retest the lows. So that's why I'm saying make it a weekly chart, because during the week it can go under, but then it can go back again. And the 9-period moving average is very close to turning negative, and it hasn't. So the technicals have deteriorated. So I'm going to say I wouldn't be in a rush to overdo it. One way you could do it is get in here at 75.14, but just a small position. And you can take your time, a little bit more risk, and say, give it a 2 or 3 point stop because it's just a small position, and then I can add. But I want to be adding when this is in the 82 area. Hope that helps you. Next question came in about Ethereum. Ethereum is trading at, 80 cents. It's up 80 cents at 26.81. But that was a huge gap down. This is the same as Bitcoin yesterday. Man, this is just not looking good. But I think that Bitcoin it made this double bottom in the weekly chart, 79,630 back in April, and then it retests it in November. It goes to, 80,700s. And now it's trying to form a base. So I'm looking at this and I'm saying that monthly chart says, wow, if you start to trade underneath this inside track propellant zone and it becomes a repellent zone, that's a problem. We still have our Bitcoin. We haven't been stopped out. It's still up very nicely, actually, considering when we got in. That's the iShares. But I'm watching this closely. We've taken nice profits. I don't want to add to it just yet. I will add to it if the Bitcoin itself can start to trade in the 95,000s, but it has to do it soon. If it does that, I'd say, okay, that's good, we can add. So it's the same thing with Ethereum. If it trades, what an ugly chart. It's an uglier chart. If Ethereum trading at 26.79, up 78 cents right now, this is the grayscale Ethereum. If it's able anytime in the next, I'll give it 2 full weeks, the rest of this week and all the way into the 12th of December. If it's able to tag the 3181 200-period exponential moving average, I say, whew, saved. But other than that, it just does not look very good. All right, another question came in here. Could I look at IWB? I haven't looked at IWB for a little while. IWB is the Russell, this is the iShares Russell 1000. Yeah, look at that. It's broken the falling axe formation resistance so far. Look, there it is. Click. Okay, so making lower highs and much lower lows, and it turns around. It's this particular pattern here, if I can do it. No, I haven't got it, so I'll do it in a moment. And the weekly chart, the 9-period moving average is still fantastic, way above the 14. So the Russell 1000 and the IWC is the Russell. This is the microcaps. This is the microcaps, iShares microcap ETF. Right in between the IWM and the IWB is the microcaps in terms of the chart pattern. So it's had a nice rally from the 143 area to the 157s, and now it's trading at 154.82. It's holding very well, but it's very interesting. The chart patterns are really quite a bit different. Now, there's another question that came in. Oh, GEV. GEV is GE Vernova LLC, Global Energy Resources. That's been struggling a little bit, and I'd say it's probably going to struggle a little bit longer. It's trading at 582. It's actually up 6 pre-market, but this chart says it's just stuck in a rectangle formation. You can stay there for a little longer. I'll be back in a moment. Basil Chapman, early edition. This is 8:50. I'll be back in a moment, and check out my really cool daily newsletter. I'll see you in a moment.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Hi, folks, we're back. Early editions to wrap up this final segment. Then you're going to go to Tommy O'Brien. And if it's the replay, you'll be going to Steve Rhodes, of course. So let me just show you this. The dollar is up at 3 ticks at 99.43. 200-period moving average has been a repellent zone. Although it's popped over, it hasn't been able to hold over it. If it is able to hold in the 100 area, that's kind of good. Right now, I've got it as a peak E. It's pulling back. 9-period went negative. MACD's negative. Stochastic's negative. A weekly chart went to a peak D and is stuck in the rectangle formation. In the rectangle formation, you can stay there for quite a while. And the monthly chart is still kind of negative. And if you look at the EUR-USD, here we go, EUR-USD, this is the euro stuck in a rectangle formation. If you look at the USD-JPY, that's the yen, whoops, USD-JPY, that is USD-JPY. There, okay. That made a peak G potential right there, holding very nicely in the upper range. So that's still showing some support, but it has been making low lows and low highs, but the 9 still over the 40. So the currencies are not really in play here as a factor. What is in play is the TLT. The TLT is trading sharply lower, down 14 cents again today, 88.63. Wow, after a horrible session yesterday. And that could put a little cap on the market right now, make it very select in terms of where you're going and what's moving to the upside. So within that context, I'm going to hand you over to, it'll be the news, and then you go to Tommy O'Brien. Meantime, back at the ranch, we want to see how this week closes. I want to see, doesn't have to because I'm not the one that's pulling the strings, but I would like somehow or other, without going too much lower, for the Dow to break above 47,575 for a leg B. That'll be the best sign that I could see sometime before Friday. It can take its time. It doesn't have to rush here. And the weekly chart is still so strong. Look at that. And in terms of that's why we added to our long position. But at the same time, you've got to be a little careful here. I think it's much more select than it was before at this particular time. And the old fuddy-duddies, they are doing very nicely. Like I mentioned, the GM and some of those old stocks that have come back to life. Have a wonderful rest of the day. I'll be back with Tommy O'Brien this afternoon for an interview. But meantime, have a great day.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice.